Hello, this is Stuck in Traffic with Wolf Gorlick. A couple minutes on IT security. Now, the other day we were talking about risk transference, right? So if you got a risk of something bad happening, you can reduce it by putting in controls, you can mitigate it by using compensating controls, or you can transfer it. And the fail we looked at yesterday was transferring it by contract to a third party. And the example I gave was, I rent a car when I'm doing these sort of regional trips with clients and whatnot. And that way, if there's a car accident or whatnot, I'm not damaging my vehicle. So the other obvious one along the same lines is car insurance, right? You get car insurance to transfer risk so that there is a car accident, the insurance company's on the hook for it. Of course, we've all known plenty of horror stories where they're supposed to be on the hook for it and they refuse to claim. So cyber insurance is taken off now. There's a recent study out, I'll post it in the comments later on today, where they looked at, I think it was 160 claims. This is the 5th year they did the study, and looked at 160 claims. $75 million worth of money flew out to handle cyber insurance claims, which were a result of data breaches and whatnot. Interestingly, got some good stats out of that. So one of them I thought was interesting was like 45% of these outages were caused by criminal hackers and malware. Right, so that's sort of like 60-40 split between insider and external. Still seems to be maintaining true. Here was 55-45, but you get the idea. Other interesting stat I thought was curious was 78%. So what is that? Like $56-57 million went to crisis communications and crisis response, forensics, those types of things. It doesn't tell us how much goes to IT, which is one of the things I'm very curious about, but it's some interesting stats nonetheless. Another thing it doesn't tell us is how many of those claims are denied. Just like car insurance claims or homeowner insurance claims, the insurance companies will first fight you as to whether or not they're going to accept the claim. And we're starting to see more and more insurance companies stepping up and fighting based on perceived risk, right? So to get cyber insurance these days, you've got to test that your program is aligned to a standard. You've got to demonstrate like a consistent vulnerability or a penetration test result. You've got to demonstrate that you've got a security program in place. So the old rule of thumb, something that we were concerned about when cyber insurance first came out was, oh, well, if companies can insure for that, they're not going to invest in the security program. That's pretty much dead. If you are doing that, you are failing to transfer risk. Why? Because when you go to process a claim, they're going to say, whoa, wait a minute. Wait a minute. You got breached. You're coming to us for money. And you weren't patching your servers? And everyone had admin access? And you had no policies and procedures. And yeah, denied, right? They're going to deny the claim. And we do see that. Google it. You see lots of claims being denied right now. I don't have good stats on that. I would like to know what the percentage is. But in terms of transferring risk, yeah, that's a fail. If you're going about it, hey, I'll buy insurance and then I'll drive recklessly. I'll buy insurance and I won't maintain my system. It's not going to cover you. It's not going to work. So, have cyber insurance. Check out your policy. See what it requires. See the level of effort that you got to demonstrate to be showing due diligence. See if you're covered. Cheers.